Welcome to your roadmap to the latest in auto. Welcome to Highway Herald. Today, we're tackling a major issue that's been unfolding for over a year: the rise of Chinese EV graveyards. What initially seemed like a curious trend has now become a serious concern for the Chinese EV industry. With millions of EVs languishing in storage, it's crucial to delve into the root causes and implications of this phenomenon. Let's explore the 8 key indicators that uncover the extent of the problem. Indicator number 8. Expansion fueled by government, not market demand. China's push into the EV sector is part of a larger strategy to assert its global leadership, driven more by government intervention than by organic market forces. This approach echoes China's previous real estate boom, where rapid, unchecked expansion led to a proliferation of ghost cities, luxury developments devoid of residents. For years, China's real estate market was characterized by frenzied construction, with residential and commercial projects springing up at a breakneck pace to rival Western standards. This resulted in an oversupply of properties and a market collapse in 2020, exacerbated by mounting debt. Now, a similar pattern is emerging in the EV sector. Government-driven expansion has led to an oversupply of electric vehicles, setting the stage for a potential market crash reminiscent of the real estate downturn. Indicator number 7. A surge in bankruptcies. China's EV market, once bustling with over 500 companies, is now in a state of contraction. The landscape has drastically shifted, with the number of active EV manufacturers dwindling to between 91 and 137. This oversaturation has led to a series of high-profile bankruptcies. In late 2023, several major players, including Evergrande New Energy Vehicle and Evergrande Smart Automotive, filed for bankruptcy, a trend that has continued into 2024. In August, 2 more significant automotive entities under the Evergrande umbrella were forced into bankruptcy proceedings after creditors sought court intervention. Similarly, luxury EV manufacturer Human Horizons is scrambling to secure over $55 million in debt financing to keep its operations afloat. Despite impressive technological advancements, the brand struggled with scaling production, selling only about 700 vehicles a month. Indicator number 6. The Profitability Conundrum. The persistent issue of unsold EVs and declining demand suggests that the Chinese EV revolution might not be sustainable. Despite over 15 years of development, most Chinese EV companies struggle to be profitable. AlixPartners estimates only 19 out of numerous brands will be profitable by 2030. The remainder will either shut down or compete for a shrinking market share. The top 10 brands, controlling 80% of the domestic market, will likely capture most profits. Meanwhile, smaller brands face a grim future, adding to the growing number of unsold EVs as they go out of business. Intense competition and the need to cut costs are worsening the situation and driving many toward financial collapse. Before we delve deeper, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now let's explore indicator number 5, challenges in exporting EVs. While China's domestic market is extensive, profitability increasingly hinges on successful exports to Western countries, where substantial financial gains are expected. Initially, China had an advantage with access to raw materials, cheaper labor, and lower production costs compared to Western automakers. However, Western governments have introduced protectionist measures to shield their automotive industries. The US has imposed steep import taxes on Chinese EVs, 100% on new vehicles, and up to 50% on essential components like batteries. Europe has similarly introduced a 38% fee on Chinese electric cars, aimed at maintaining competitiveness for European automakers. Although this fee is lower than the American tariff, it still significantly impacts the competitive edge of Chinese EVs in Europe. These protectionist policies highlight the growing friction in global automotive markets and the challenges faced by Chinese manufacturers in achieving international success. Indicator number 4. Domestic market constraints. Despite being the world's second-largest economy and most populous nation, China's automotive market faces significant constraints. The success of China's EV strategy depends on expanding globally, but current challenges in North America and Europe make this unlikely in the near future. As a result, Chinese automakers are focusing primarily on their domestic market. Last month, China sold about 1.4 million EVs and plug-in hybrids, with nearly 900,000 of these remaining in the domestic market, representing around half of all car sales in China. Although there's room for further growth within China, Real expansion opportunities lie in Western markets. With China's automotive production capacity at approximately 40 million vehicles per year, and the domestic market absorbing about 22 million annually, there's an oversupply of 18 million vehicles. At the current rate of global expansion, this surplus is unlikely to be resolved soon. Indicator number 3, the role of government subsidies. The rise of EV graveyards in China can be largely attributed to the industry's growth being fueled more by government subsidies than by real consumer demand. Over the past 15 years, China has invested over $230 billion in the EV sector, supporting both manufacturers and buyers. This investment has led to some of the world's most advanced EV technologies and the largest global charging network, which accounts for 65% of the world's chargers. Despite these advancements, many EV makers still struggle with profitability. Even BYD, China's largest EV manufacturer, needed substantial financial support earlier this year to address weak sales in February and March. In response to the market slowdown, the government has introduced new incentives, including tax relief measures extending to 2028, despite originally planning to phase out such support by now. Indicator number 2, growing doubts among consumers. In 2024, a significant shift in consumer sentiment towards EVs has intensified challenges in China's market. Rising concerns over battery safety, durability, and overall value are fueling skepticism. Reports of battery-related incidents, including fires and sudden range loss, have undermined confidence in EV reliability, especially as Chinese consumers grow more cautious with spending amid economic uncertainties and higher living costs. Rapid advancements in EV technology have also exacerbated consumer hesitation. Potential buyers are wary of investing in vehicles that might quickly become outdated as new models emerge rapidly. Additionally, the availability of subsidies intended to boost sales suggests that the market might not be self-sustaining. This growing skepticism is contributing to a mismatch between supply and demand, leading to an increasing number of unsold vehicles in EV graveyards. Indicator number 1, effects of global economic changes. In 2024, global economic conditions are compounding difficulties for China's EV industry. Inflation, rising interest rates, and economic slowdowns are impacting vehicle sales worldwide, including in China. Higher living costs and increased financing expenses are making new car purchases, especially EVs, less appealing to consumers. Western economies facing potential recessions add to the complexity for Chinese EV exports. Economic uncertainty and rising protectionism in markets like the US and Europe are reducing export opportunities for Chinese automakers. Additionally, quality concerns and geopolitical tensions contribute to Western consumers' reluctance to embrace Chinese-made EVs. These global economic challenges are straining Chinese automakers, leaving them heavily reliant on government support. As the Chinese government deals with its own economic pressures, the future of this support remains uncertain, further impacting the sustainability of the Chinese EV market. If you enjoyed this deep dive into the challenges facing the Chinese EV industry, make sure to subscribe to Highway Herald for the latest updates and insights on the automotive world. Also, please leave a comment below to start a conversation. Thank you and see you on our next ride.